you should always start out looking at the daily chart. That's your get-go. And if it looks timely, because it can be good on the weekly chart, when you look at the daily chart, you go, oh, it's extended. You got to be faster. Even if you're an investor, you can't wait to break the 200-day MA. You got to first take some incremental off like we did in the crypto stocks. I'll always think that the good old-fashioned chart is numero uno. That's where it all starts. And then you play around and fine-tune it. But just don't look around too many corners. The way it looks now, I think we're good unless we start to suddenly get downside gaps and things we don't expect. Although group action was always important, you'd have much more diverse good and bad within the group. Now, while of course there are exceptions, you have much more cohesive group action. When I put a minus after the 4B, I'm saying that's my nomenclature to tell you that I think that you've reached the bottom. You've seen the low for the cycle. This is great. Look at how this morning you could have sold it over 26. That's why I talk about in this market. I don't care if you're an investor, you have to, when you extend it. The stock had gone from 15 to 26 in a matter of days. It's common sense, you trim. And now I'm looking to buy it again.
All right, welcome back everybody to the TraderLion podcast brought to you by the Ultimate Trading Guide and DeepView. I'm your host, Richard Moglen, and it's an honor as always today to have market legend Stan Weinstein as our guest. Of course, he's the founder of Global Trend Alert. He's also the author of this foundational book that I have behind me. Stan, thank you so much for taking the time. Great to see you. How's it going?
Rich, it's my pleasure.
Yeah, perfect. And before we dive into the podcast, and we've got so much to cover with regards to the current markets, stocks that you're watching right now, thoughts on, where the market's going and all of that. We do want to mention that we're extremely excited to be partnering with you to bring Global Trend Alert to retail traders through TraderLion.com. If you're interested in that, which I highly recommend, if you're interested in Stan's thorough market and stock analysis, you can click the link down below in the description as well as popping up right now. And Stan, anything you want to mention with regards to anybody interested in accessing Global Trend Alert through TraderLion.com?
Rich, I think you're doing a great job. We do our best here, and now they just have to see what we have to say today. And if they want to join the team, I'd love it. Never guarantee 100%. Only the liars are always right. I do think we can be right 8 out of 10 times. And if that continues to work, at the end of the year, I just think you need a creative accountant.
For sure. And I've been reading your thoughts every day. It helps keep me on track personally. And your weekend analysis report is extremely, extremely thorough. I think everybody can benefit from it. So if you're interested in that, check out the link below. But let's go ahead and dive right in, Stan. It's great to have you on. And I know that you've been bullish for quite some time on the market's major trend. What are your kind of thoughts about what's going on right now in this moment?
Good. First of all, we're going to separate the long term from the short term. Long term still bullish, but there's an important but here. You can see that there are less Indians following the chief up the mountain. So selectivity is a key. I know you've been reading me. I've been stressing that sure we care what the index is doing, but yet even more important than the indexes, in my opinion, is the stock selection, because we're going to show them today that this is one of the most unbelievable bull markets, and I've seen a lot of them going back over the decades, that I've ever seen, because you truly have bull and bear markets when you look at the individual charts coexisting side by side. And in some markets, like I remember back 1972 going into 73, yeah, some stocks were dragging, while in those days the Nifty 50 were going higher. But this market is different. It's unbelievable and unforgiving, because if you look at, we're going to show them today, some of the stocks on my sell list that haven't just gone down, they've exploded like you're in a major bear market. So this, I think, shows, well, obviously, I always believe that technical analysis, the way to have riches, it's more important than ever to be in gear, because not 100%, but so many of my stage 1 and 2 issues have performed great. Well, at the same time, I can't believe the devastation that's taken place in a lot of the stage 3 and 4 stocks. And happily, we've saved people a lot of money by staying away from those. And those people that do shorting have also been handsomely paid.
Yeah, it's amazing how different groups have acted tremendously different. Some of the groups that have been acting really well, especially since the election, and we're going to talk about a few of these names, crypto-related stocks. They've just been taking off. And I want to,
Unbelievable. Right. And I
yeah,
don't mean to interrupt you, but
go ahead.
again, I never got the short term in the market, which we're talking about, but crypto's a good example.
Yeah,
That's been our number one play for many weeks. So if you're asking me for the next several months, I still love crypto. Trading point of view, we did some trimming yesterday and the day before because some of them were just, trees don't grow to the sky,
yeah,
just were too far extended and they're already correcting. So separate short term, long term. And when we have time, we're going to also talk about short term in the market, some levels to watch, etc. Because even though I'm still long term bullish on the indexes, near term, I think they pulled the rubber band about as far as it's going to go. And I think there's already a silent correction underway. And if certain levels, in fact, let me give them to you now. If the
sure.
following levels all give way on a closing basis, remember, I'm talking as a trader. This isn't a bear market call. But if, for argument's sake, the S&P 500, the SPX cash closes below, and closing is important here, below 59.60, the Dow breaks down and closes below 43,640. The NASDAQ confirms on the downside, closing below 19,150, and the Qs close below 509. You'll note I'm not even mentioning the Russell right now because the Russell already short-term broke its downside level. Then you're going to see that this correction, which I've been saying is a subtle correction, become a little less subtle.
And what do you make of that? The gap up across the board and really strong action up until, as you said, yesterday and today as well. What do you make of that strong action right after the election? What do you think kind of caused that catalyst?
I think it's obvious the market, we're not going to get into politics here, but the market loves the Trump victory. And I think without, going into the economics behind it, it's very, very clear that from Tuesday night in the aftermarket, when it became obvious that Trump was going to win, the market started moving sharply higher, and until yesterday, it hasn't stopped moving. But again, it's important, especially for traders, to separate long term versus short term. And short term, there are a lot of things. I know you're very sharp, Rich, but if you look at today's action, and we're recording this, I believe, on Wednesday, if you look
On
at
Thursday, yeah.
today's action, even at best, when the Dow was up about 230 points around 1 o'clock my time, East Coast time, at that time, you had a very narrow advanced decline figures. Then, as the session wore on, you closed tonight with all advanced decline figures on the negative side of the ledger for the New York, Amex, and OTC. That and so many other things tell me that, yes, you're going to correct. But if used properly, and this is what people have to, even investors have to learn to do some trimming. This isn't the old days where you could just hold them and forget about it. You take some off in extended stage two stocks, and they're going to give you a great opportunity to buy again the portion that you've taken off as they pull back toward their respective areas of support. So if handled properly, I think it's like that old Chinese thing where crisis and opportunity. I think that a short-term crisis can present us with a big opportunity if handled right.
For sure. And this is a question that was commonly asked. I asked on Twitter for questions what they would like to ask you if they were speaking with you one on one. And a great question, I think a great frame for how to analyze the stage of this bull market is: if this bull market were a baseball game, what inning do you think we're currently in?
That's a good question. I would guess that we're probably in the eighth inning
Hmm.
of the bull market. But again, I know it's going to be repeatedly said, but the bottom line is, I don't mean to say it over and over again, but there are a lot of stocks that aren't waiting for the game to be over. Their game is over. So on a macro basis, I would say you're probably in the eighth inning, and it shows in a lot of different ways. People make the market so much more difficult it has to be. It's never a guarantee. I don't be a wise guy, but if you take a look, when did we have the last new high in the NYSE advanced decline line? If memory serves me right, it was October 16th. Hey, we're a month almost past that. And meanwhile, you've seen the S&P and the Dow and so many indexes make new highs. This is a classic sign going back over the years that you got to be a little bit more careful because you're losing momentum on the upside.
Perfect. And you mentioned advanced decline line a bit earlier. In terms of market breadth, anything you want to add there? Because a lot of people were curious about your thoughts on, the participation, the breadth, all of that in terms of how you view the markets.
Yeah, well, that's another thing. What we just covered, the fact that breadth is narrowing down, it isn't like, oh, that's a major sell signal, but it is a warning. So it tells us two things. One, from a market point of view, it says be a little bit more selective and careful here because you are, starting to lag. And secondly, from a personal tactical point of view, it's telling you, hey, you should always be disciplined, but you know what? Now you've got to be even more selective and disciplined.
Perfect. And we mentioned crypto. What other groups and themes do you think are the strongest right now, and you're personally focused on towards the long side?
Right. Well, first of all, I know you read the letter, I've had a lot of software stocks. And this is
Yeah.
again, in a way, even though it's somewhat frustrating, we all have egos, and I don't mean to be overly egocentric, but I think this is the beauty. Most, especially the fundamentalists, can handle what's going on. But if you take a look, even within technology, software, not 100%, but a lot of my software stocks are still rocking and rolling. At the same time, going into the same area, you see a lot of the semiconductor stocks are dragging big time, and some of which by my sellers, they're going down with a vengeance.
Yeah.
So you can't even just say anymore technology. You have to go and say, fine, semis I don't want to do. Conversely, a lot of software does look good. And then even within software, there are some charts that look bad. So this really highlights the system. And I think why our approach is so helpful because well, when I wrote my book, which was many years
Yeah.
ago, in fact, if you look at the cover, you'll see, my hair was black in those days or whatever. But the bottom line is, you see, I said in my book, I called it my forest to the trees approach. And in there, first, you start out with, okay, the forest. Are you in a bull market? You want to be more on the long side. So that's one. Then you work down to groups like crypto is good, even though it's going to come in at short-term extended. We've had a lot of software. We've also had a lot of building product stocks, a lot of cyclicals like that. So those are good areas. Conversely, we've stayed far away from energy, which has been very poor relative strength. But even there, it's interesting because if you look, while most of the oil-related stocks are negative, oil storage has been very bullish and has been moving ahead. So again, I think that our work deals nicely with what is a very, very challenging market. And I'm proud of, what's taken place.
Hey everyone, just want to break in here to make sure you guys are aware of a special resource that we created with Stan himself, the Stage Analysis Masterclass. This is a completely exhaustive explanation of exactly what he looks for and how he's adapted his style to modern markets. We worked on this over the past few years or so. So many different examples, case studies. It builds everything from the foundation up. And just to run through a sneak preview of what's included in this, and this can be accessed via the link down below in the description, you can see that we've got 12 different modules here. Module 1, build your foundation. Module 2, stage analysis, covering the key concepts and going through many, many different examples of different stages so you can analyze them just like Stan does. Module 3, stock selection and ideal buy points. Module 4, advanced technical analysis, really getting into the important nuances. Module 5, sell rules and position management, how to actually manage a position. He really goes in depth into his process and his style. Module 6, short selling and risk management, not talked about enough, but extremely, extremely important. Module 7, market and sector analysis. Module 8, routines and mindset. Module 9, covering the full system from the ground up, reiterating the most important concepts for you guys. And module 10, $10 million worth of charts. We cover stage 1, stage 2, stage 3, stage 4, full cycles. And also with each of these modules, we included special challenge. So you guys are not only learning the material, but applying it to your own trading And each of these $10 million worth of charts includes excellent model books of the greatest winners of all time. They can really go back and study the important nuances that Stan looks for and apply that skills into real time in the real markets. Module 11, full discussions covering all the exclusive interviews that you have as a part of this masterclass. And Module 12, key resources and additional Q&A. So thanks so much for allowing me to break in here. Definitely check out this resource down below, the Stage Analysis Masterclass, and enjoy the rest of the interview. Take care. Bye. Perfect. And the last question before we get into your trading style and get into many of the stocks that I know you wanted to go over, does this market remind you from anyone in the past? Are there any kind of key similarities to markets that you previously traded?
Yes and no, to a degree, because I've never seen a market that's this diverse and so intense. But to some degree, as I said before, in 1972, 73, you started to lose a lot of stocks even before the market reached its top in early January of 1973. And then the Nifty 50 went for a while, but it had narrowed down viciously, and eventually I got them all. So a little bit like that, but this is, again, more intense. The other market, I would say, is somewhat like, and these are a little bit like, I would say in late 1999, going into early 2000, those were the days of the internet, boom, internet bubble, and a lot of stocks were running well. Market, many stocks had topped out, and then eventually the whole thing became a problem. I'd say it's somewhat like that. But this, to a degree, I can't drive the point home strong enough, is the most diverse market, because it isn't just like, oh, some stocks are lagging, which we're going to show them tonight. You are having stocks that if you covered up the indexes, you would say, oh my God, you're in a bear market. Conversely, there's the other things that's going to whet your appetite. So this truly is the most diverse split market that I've ever seen.
Perfect. And getting into it, a big question that people had is, as you know, thousands and if not millions of traders have read your book. What are some of the key differences between the markets that were in existence back then when you wrote that and now? How have you kind of adapted your approach? I know in the past you've talked about everything's faster. You've incorporated the 50-day moving average, and you're much quicker to take profits. What are some of the key things that traders now should, focus on compared to when you wrote your book?
Well, first of all, you just did a great job. You encapsulated most of my answer. One, back when I wrote the book was 1987 going to 88. I would say I did a little trimming every time you broke the 50-day moving average. Now, with the intensity of moves, I tell people, and I personally, if it breaks the 50-day MA, I don't care if it's just going to be a 1 or 2 month correction. I'm out of there. I don't want anything with a black cloud. So I'm much faster to move. You have to, because this is an incredibly fast market. So I think that's probably the biggest change. The other one, in those days, I didn't use stochastics and MACDs. For traders, I think it's important, which we've used for several years now, the MACD and also stochastics. But the main thing to get across, in addition to that, is like we're talking about the crypto. When you have a good profit and something that becomes extended, in the old days, I'd say, hey, if you're an investor, you're fine, just hold it. If you're a trader, take some off. Now, a good example, you take a look, like we had a lot of the crypto stocks, and in there, some of them had such moves as of yesterday on Tuesday that I advise clients to take some good profits there. And in just 24 hours, what you see has happened is unbelievable. So there's going to be another buying opportunity coming up in the days ahead. But to me, even an investor has to say, hey, I'm going to move incrementally this tape, because just to sit by idly while you see these incredible wild moves, I think is ridiculous.
Perfect. And along those lines of dealing with extended stocks, we covered in the last podcast we did your key reversal days, and that's a sign to take money off the table. So we'll have the link to that podcast down below. We won't explain it again today, but highly recommend checking that out. And another question people had along those lines of how you've kind of adapted to changing markets is, Are you doing more of your analysis these days on daily charts versus weekly charts? And do you use any different moving averages, like even shorter term than a 50-day moving average, to
Y-
help you guide your
Yeah,
thoughts?
yes and yes. So here we go. First, you should always start out looking at the daily chart. That's your get-go. And if it looks timely, because it can be good on the weekly chart, when you look on the daily chart, you go, oh, it's extended. So first you study the daily chart, you find a good chart and a good group, and you start focusing. Then, especially if you're an investor, you focus next, after you've done your daily chart work, on the weekly chart for that specific stock. And you may take a look and go, okay, it's breaking out at 10 for argument's sake, but you look on the long-term chart, you see a bunch of resistance at 12, 13. You may do it for a quick trade, but you're not going to become heavy in it. Conversely, you take a look at the weekly chart, you go, wow, there's no significant resistance till say 18 or 20. That's both a trade and an investment. So it shouldn't be one or the other. It should be first A, followed thereafter by B.
Perfect. Yeah, the weekly gives such important context to everything. That's so true. And one other question people had, and last time when we were going through a lot of charts, many of your entries were on gaps because, as you've mentioned before, gaps mean there's a tiger in the tank. They show there's power, there's strength behind a move. How do you personally like to trade gaps, and how do you manage risk on those type of buys?
Okay, well, first of all, again, common sense, which I used to kid around when I was on the seminar circuit, I'd say is a rare commodity on Wall Street. But common sense tells you, say the stock was 20 and the volume comes in at gaps at 21, that's fine, do it. But conversely, like happened the other day with some of the crypto stocks that we're in, they opened with such huge gaps. I would only buy back on the correction. Now, while we're talking about gaps, this is another misunderstood fallacy. Some people think every gap has to be closed. First of all, that's not right. If you go back to 1962, when I was a youngin' before I really got in the market, you'll see that there was a gap down at Dow Jones. I think it was 550 or 570, something like that. It never was covered. So that was a very good sign. Gaps that aren't covered, that they come down and try to close it, but they don't, that's really an extra special bullish sign that there's a tiger in the tank. So that's a very good thing. So first, it helps you. You may get initial buy some. Then if you pull back and if the entire gap is closed, but you don't violate, important support, you'll hold what you have, but I wouldn't buy more. Conversely, if it comes back, and I think you're going to see in the next few days, because there are a lot of gaps on the charts, some of them aren't going to be covered. And those are the ones that you really want to focus on, especially if you see them start to round over and hold above the gap. That's exciting. And I think you're going to get another good buying opportunity in many of those gap stocks.
Perfect. And another question people had was if you had any recent 4B minus trades, which is basically your setup on a really beaten down stock. There's a bunch of criteria which we went over last podcast. But have you traded that setup recently? There's been so many stocks working well that there haven't been that many, but yeah,
Right,
I'll hand it
right.
over to you. Yeah,
Exactly. Again, you're leading great. First of all, I haven't put any 4B minus issues into my issues because there's so many great stage 1 and 2 stocks. I don't want to trade down to things that are, yeah, I'll get a quick trade out of it. So that's number one. I haven't done it. But there is one stock, if you can put up Dexcom, I
yep.
think will show us so many things about that's tremendous. First of all, let's define what a 4B minus stock is that you want to play. Number one, there's certain criteria. It has to first have fallen sharply and have room to trot on the upside. You can see if this breaks out, it does. And in fact, if it closes cleanly above 76, take a look. It's clear, talking about gaps, it's clear sailing all the way up there to the moving average. So that's it. So you got to have a lot of factors. One, you have to first have room to trot. Two, you have to have made some kind of a base, and this has an intermediate term base, even though it's still well below its long-term moving average. So we're talking about trading, not investing. That, so that's the second part of it. You want a base, you want room to trot, and you want to have moved above or about to move above the 50-day moving average, which in this case it's already done. So this would be a good example if you wanted to trade a 4B minus stock. And when I put a minus sign in the issue on the 4B stock, again, let's define terms. Stage 4 is bad. 4B means it's late in stage 4. When I put a minus after the 4B, I'm saying that's my nomenclature to tell you that I think that you've reached the bottom. You've seen the low for the cycle. So that's, even though not a good long-term investment, that's a good potential 4B minus stock. Now, I don't know if you can show, because I remember this chart, if you could go back and show me a longer term, we could do a lot with this chart.
Yeah, where would you
Oh,
like
okay,
to go?
great, 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 great. So you've done it.
I can zoom in
What?
wherever you'd like. Yeah.
Okay, okay. First, let's go back a little bit more to the left. Let's get rid of some of the stuff on the left and have more on the right.
Oh, more on the right. Okay.
More on the right.
There we go.
Okay, that's perfect. Now take a look. Look at all the things, forgetting now about the 4B minus deal, which was 1 point. Let's see other things that we can learn in this chart lesson. First, take a look, Rich, like I would guess that was late 2021. Look at that little head and shoulder top. You're right on.
Right there.
That
Yeah.
little head and shoulder top. So it had been a wild move, but you have to get paranoid. You see the head and shoulder. And on top of everything else, we've been talking about 50-day moving averages. After you made the head at that run up to the top, yeah, perfect. You are one hell of a great teammate. Look at how when it broke the 50-day MA, that not only warned you like, hey, I think we should get out of the stock, but for confirmation, look at how the next two rallies failed right underneath the 50-day, which is saying, yeah, that's great. Yep, yep, yep. That's telling us, oh, we really have a problem. And then when it broke below, I assume, is that the 150? What is that
This
next
is the
moving average?
this is the 200-day moving average.
Oh,
This is the
that's
50
great.
day here.
Okay.
Yeah.
So, right. So first it broke the 150, which you don't see there. Then when it broke the 200, that's fine. But again, going back to what you asked me earlier, in the old days, you might have said, fine, you just do a little trimming. And if it breaks the 200, you get out. In this market, it's ridiculous. Head and shoulder top, broke the 50, out of there. Once you broke below the 200, forever hold your peace. And take a look. After it got smashed on the next rally, although it temporarily for a few days moved above 200, it failed near the 200, and then it broke below the 50, and it got creamed big time. So a chart like this can show us so many different aspects, and it's what I said earlier, that we really make the game harder than it has to be, because our emotions come in and we start thinking, what is Powell going to do, and this and that. I mean, if you just kind of simple-minded and you go follow what the charts are telling you, again, you're not going to be right 100%. You're going to be right a hell of a lot of the time. And to me, which I've used this analogy so many times over the years, it's like when you're playing blackjack. You don't, if you're really a good blackjack player, you don't do thinking and reflecting when you've got 11 and the dealer has a 6, which is the best hand that you can have. You double down. Now, you may lose that next hand, but if you do that consistently, you're going to be right so much more than you're wrong. And it's the same exact play in the stock market, but the fundamentalists get very upset when you liken the market to trading cards or trading blackjack, etc. And it really, from a systematic point of view, is the same concept.
There's a really smart guy who I learned a lot from who said something along the lines of the tape tells all. I think basically what you just summed up, it can be summed up so simply. And by the way, it's pretty cool. In DeepView, we built in some Stan Weinstein stage analysis recognition, and we're picking this up as a 4B minus, which is very cool right here. So that's a cool feature that we've got. Stan, where do you want to take us now? I've got your positive recommendations, your sell recommendations, your negative charts, your positive charts. Where would you like to take us?
Let's first, this is great because I love working with you, and I think that we're doing a great teaching lesson here. And I love it. That's my legacy. Hopefully, many, many years from now, when I pass into the great boardroom in the sky, that's what I'd like to leave people with. So let's, in today's lesson, see, it's kind of like if I was a tennis player and I was teaching you tennis, you're first starting out, and I'd say, here's the backhand, forehand. Let's go through charts that worked out that we recommended big time. And it's not just to brag, although we all have egos, but it's more to train everybody's eye to see so they can spot it, that these great moves aren't happenstance. These moves are quite predictable in the following exactly what I wrote about many decades ago. So let's go through some recommendations. And I know you're good. You tell me what's up and we'll do it together.
Yep, we've got ALSN here, Allison Transmission.
Good. So take a look. Can you give me a little bit more on the left?
Yep, of course. Got a
Okay,
big base here.
there you go. First, take a look. You had an intermediate problem, you got out. And don't ever worry about being whipsawed. It's better to get out and not suffer and have to reach for the Maylocks, and then you come back in. So it was a great stock, but then show them on the left side there how it made that top. It broke the 50-day MA. It gapped down. You were out of it. You weren't hurt. Then it reformed. And look at across, let's go through that old series of highs back there in the September-October period. When you broke out above there and the volume came in, volume is important. Again, that'll show you tiger in the tank. Look at that volume that came in. Look at the gap. Boom. Look at the big move. And again, I think that it followed the trip perfectly. And then you got out because you broke the 50-day MA, and it was fine to get whipsawed. It went back above the 50-day MA. You could go back in, and you had another great ride. So I think that chart shows us a lot. Let's show them some more while I'm going to take a drink here.
Yep, of course.
Okay, what is the next one, Rich?
Here we've got BLOK, block.
Oh, okay, great. So here we have a crypto stock.
Yep.
And look how it made that double bottom in the August-September period. And it was meaningful that the second move down held the 200-day in textbook fashion. You could do a little bit there with a close stop loss if we're wrong. Then when you broke out above that prior little top, it took off nicely. Now you take a look and you see today, I had traders take some off. I think you have a short-term key reversal day. And when it comes back in, I think this has the potential to come in. I'm just guessing something like 42, 43 into the gap area, but I don't think it's going to cover the gap. I think it'll present another great buying opportunity.
Hey everyone, how's it going? I hope you guys are enjoying the interview with Stan. I just want to show you guys a free resource that may complement this webinar. If you're interested in stage analysis and want to learn more about how Stan analyzes charts and get even more examples, more tennis balls hit at you, we have a free resource, the Stage Analysis Model Book. You can access it via the link down below in the description. It's also popping up right now, and it's 100% free. And by signing up, you get access to key lessons about stage analysis, the stage analysis cycle, a free webinar here, and then you also get access to all these different model book examples. And to go through a few, they really get into the nitty gritty about what you want to look for. They throw even more excellent examples in terms of price and volume action, what you should be looking for, and important nuances that Stan has developed over the years, looking for gaps, looking for holds and moving averages, and just they're great examples to study to train your eyes to spot the next great stage 2 breakout. So definitely check out the link down below in the description to access this resource for free. Perfect. Next up, we've got app, and this has been a monster.
I'm sorry, which one was this, Rich?
App. App
Oh,
love it.
yeah, been a monster. Again, look at where it broke out above, its area there. Again, look at how the volume came in, and the rest is history. It was beautiful. And this one didn't even come back below. And that's another thing. It didn't even come back close to its 50-day moving average before gapping again. That's a super bullish sign.
Would you be taking some profits up here, or
Yes.
what would you be looking? Okay.
Yeah, I would take a few chips off and then take a look. Let's see, you have Wednesday, Tuesday. Yeah, breakout. Use Monday's low there. You see that? Yeah,
Use
that's
low.
it.
Yep.
Monday's low, closing below that, I would trim it harder. And then as it tries to cover the gap, and again, watch it. I think it's not going to cover the whole gap, but it's going to make an attempt to. Coming in again, I'd be a buyer. But this is another thing. I think that we're doing such a good job of, training here. Take a look and look at how each of the last several days, as it went up, the volume is declining. So that's another little, this is for traders, not investors. That's another little hint that, you know what? Don't be a pig, take some off. It's losing some upside momentum, but it's still good long term.
Perfect. Next up, we've got ADP.
All right, now let's study this guy, because all of these, which worked out so nicely, teach us something. You take a look, boom, it broke out above that February, March high back there. It was sort of a parallel line, I mean, the horizontal line. Then it took off beautifully, and it's into the great beyond. And let's go to where we are now. Again, and this is why I feel we could separate the scalping versus the long term. Long term, this is a Picasso. Short term, it feels like, hey, if you close below Tuesdays, even Monday, Tuesdays lows in there, you should start to do a little profit taking, but just trimming some. And again, it's going to try to cover the gap. We have so many extended stocks here with gaps. That's why you see in the last 48 hours, the tape has become so messy and churning. It's got to do some consolidating and digesting the terrific move.
And for this one, are you buying the breakout through this high, or are you starting near the 200-day moving average and maybe adding on the
We didn't
pullback?
recommend it till it broke out.
Gotcha. Cool. All right, next one we've got Axon, another really nice breakout on pickup and volume right here.
Right, and this is why, as we're showing one after the other, as I use the analogy of hitting tennis balls, when you first start out playing tennis, you're thinking, is it a forehand? Is it a backhand? But after you played a while, it's instinctive. Well, it's the same damn analogy here. It should be instinctive. And that's why we're doing all this work teaching. Look at again, in every case, first it held the 200-day, and you could buy some down there, which I didn't, but it could be done with a tight stop. Then as soon as you got that breakaway gap, recommended it, taken off thereafter. You got a second gap here. This is a thing of beauty, a joy to behold. So again, if you train your eye, after a while, it's like, yeah, I see it. When you see these good patterns, you just do it rather than thinking about, oh, does my broker agree with me? Are the fundamentals good? Forget it. The market is smarter than all of us. And at times over the years where I've made mistake, it's because I've overthought things rather than just going with the flow. So just remember, it's a cliche, but a true cliche. The trend is your friend.
Perfect. All right, next up we've got Bill.
Same,
Bill. Yep.
same exact thing. Now, this one was really easy because look, it was coming through the 200-day moving average. You gap, the volume started building up, and the rest is history, and it's a recent history. And this will be a buy again, pulling back. But look at how, and this is another thing. We keep up close to 100 indicators, which we give the input in each weekend issue. of the important indicators that should be followed. But that's our job. I would say the average person, even the average portfolio manager, doesn't have to do all that work. Number one, I do it for them. But number two, again, common sense. Look at how many stocks are on stilts. When you see this to me, short term, I'm only told as a trader, is better than all the damn indicators. This is common sense saying, hey, how far are you going to stretch these things before you take some profits and they correct? So I think that over and above a lot of indicators like the stochastics are now overbought and other things, just common sense shows the probabilities, no guarantees, but the good probabilities are that you're going to correct here and just be ready, do your homework. And when they come in, while other people will start worrying about, oh my God, here we go, maybe we're starting a bear market, you'll be ready to scarf them up.
Perfect. All right, next one we've got Docs, DOCS. And here's the
Same,
breakout.
yeah,
Yep.
right. Show, can you just move it back a little on the left so I see the right?
Yep.
That's perfect.
Yep.
Again, this is same song, different verse. Look at it where it broke out, back even before the gap. How if you connected those tops going back to February, right, you're on top of it. February and then June or whatever. When it broke there, look at how the volume came in. It's repetitive. Look at the gap, whatever. Now you got a second series of gaps. It's not a coincidence that these all have been big winners for us. Let's do the next one.
Yep. We've got uh, GILD.
Oh, now here's a good, and this is interesting because, this one I've taken profits for clients a little more aggressively. Chart is still good, but I don't like the way the group is acting. And again, you got to, use common sense. You know that Trump is not exactly the friend. You're putting Robert Kennedy Jr., which he will be in there. He's not exactly friendly to the pharmaceutical companies. So this is still a good one, and it's worked out well. But I wouldn't buy this correction. I've had them trim it, and I would look for something else, like in the crypto areas it comes in, rather than in the pharmaceutical, even though this has been a big winner. I think that you want to keep it simple and you want to put all of the odds in your favor.
Perfect. Next up, we've got POD,
I'm sorry, which one is this, Rich?
PODD.
Oh,
And
good.
yep.
Okay, again, look at how it broke out above that line there, boom, right above its horizontal line. Look at how the correction respected the 50-day moving average, and the rest is history. And this one I would buy as it comes in and tries to cover the gap, especially if it doesn't cover all of it. This one makes more sense to me.
And what's the reasoning behind that? Why would you look to focus on one versus another one?
Oh, just because of the group. I didn't
The
like
group.
Gilead being in the pharmaceutical group, even though it's a great chart.
Gotcha. All right, we've got IDCC.
All right, here we go. First, that's it. First, you broke out. You got the volume coming. You're showing where the volume came in the gap. Look at how twice now it respected at both points the 50-day MA. Beautiful. And now I think you have a little temporary reversal going on. I
Yep.
think it'll be another good buy as it pulls back to the top of that recent zone in October. If you go up there where, yeah, that's perfect. As it pulls back, if it holds there. And this is another thing. You make up your list, and these are all good teaching things. You make up your list of potential buys. And now let's say it comes back and it doesn't even reach the area that you showed them with right now with the spotter, but it holds a little above it. That's great. But let's say conversely, it comes in and it holds the 50-day MA. I wouldn't buy it. I want to stick with the ones that have no black clouds and obey like obedient kids. So boom, I want to see this one hold at the last breakout.
Perfect. All right, next one we've got PAYO, Payo. And here's the breakout on volume right here.
There you got it. One after the other, broke out in volume, had the gap. It's beautiful. And again, look at it's making a little baby top there. And as it comes back to try to cover the gap, I think it'll be a buy again. But you see, and this is why I keep stressing, the market feels like it needs a little correction here. And obviously, never a guarantee, but I know the good odds. Again, this is 11 versus the deal is 6. You're extended, it probably comes in, and you should be making up your list so you can use the coming correction to your advantage.
And for this one, are you buying right near the open on the gap up? Are you buying throughout the
Yes,
day? How are you handling it? Yeah.
yes. Buy you only got a chance to buy. In fact, that was valid. Only got a chance to buy half of the position wanted because it didn't really give you a good second chance. But fine, you got some on. Half a loaf is better than none.
Perfect. All right. Next up, we've got VICR, Viscor,
Here
or
we
Vicor.
go, same thing. Broke actually first had the little breakout there. You, you know,
Oh,
the
right
little
here.
go down
Right here.
into the high over the September little peak.
Yep. So right
Yeah,
here. Yep.
yeah. You see, first you could do a partial. Then when it broke out cleanly and close are important, and the volume came in there, you're right on. Then you could buy harder, and this will be another opportunity, but it's going to come in as it corrects back in.
And this is kind of what you're looking for now with these extended names, a pullback, it holds, and then explodes back up. Is that right?
Exactly. And it shouldn't hold, it shouldn't come in all the way to that recent bottom. If it does, you don't have to get out if you're an investor, but you don't want to buy more. But I think, let's say for argument's sake, I'm looking, I don't have my glasses on. I think it'll be about a 48-ish, maybe a 48, 49 kind of pullback. Holding in there would be very healthy.
Yeah. And the 50-day might rise up to meet it around that area. So that makes sense.
Bingo. See, it all will coalesce together.
Yep. All right, perfect. Where would you like to take us now? We've got your sells, we've got your positive
I
recommendations, your
want to
negative
do
recommendations.
the cells that work, then we'll give them new stocks.
Let's do it. All right, here we
So
got
we
Ace.
now,
Yep, go for it.
okay, so we're halfway there. Now we've done the backhand. Now we're going to do the forehand. Look, these are all sell recommendations. We're not talking about from 2 or 3 years ago. This is right now in the middle of this rip-roaring bull market. Just look at how important it is to be selective and to stay in gear with us and to stay away from any of the stage 3 and 4 stocks that we bring to your attention. Take a look. First, let's trace it. If you go back to late August here, you'll see, Brad, first it moved back above, first it gave a warning, it was below it. It was below the 200-day moving average. Then it moved above it, made a little bit of a top, but it was still a series. A second rally was lower than the first rally, and even the first rally was lower than last March. So this was a problem. And then boom, it opened with a gap on the downside, and you didn't want to be in this guy for sure. And again, you see a series of gaps, a second gap down, and this is in the middle of this tremendous bull market. Let's do the next one.
All right, we got ADM here.
Okay, now here we go. Look at same pattern. First, it gave us a warning. That's good, Rich. First, it gave us a warning after it made that little head and shoulder top there back in July, August, and then it broke back below the 200 and the 50. Then the failing rally for a nanosecond got above what was still a declining 200-day MA. And you as soon as it came back below it, if you're in it, you got to get out. And then it broke the 50-day, and look what happened thereafter. And this again is the middle of this bull market. Thank God we weren't in it.
Yep, here we go. ASC.
Now you start to see the repetitive patterns, just like we saw all the bullish guys. Let's go back because this tells an interesting story. That's great. First, go back and look at, I would say it was probably April, May, and you see, no,
Oh, back here.
closer. Yeah. That
April,
April,
May.
May.
Yep, yep.
Okay, yeah. So let's put that good. First look, the stock is fine. So go to the high.
Hmm.
This is the feel we're trying to develop in them. Then it sold off and it held above the 50-day. I mean, that's great. Now, the next rally failed to go above the other one, but that's still like, oh, it's not terrible, but boom, show them how it not only then suddenly broke below the 50-day MA, but it did so on a gap. You have to get out of this stock, even though it had for a nanosecond moved back above it. We're not buying this. And thereafter, look what's happened to it. You would think you were in the middle of a rip-roaring bear market. It's just been destroyed. And
And
there's
get
so many that have been on sell list like this, which is why I'm so proud of the methodology helping people go through this terrific, terrific split environment. Let's go on to
perfect.
the next one.
Yep, we've got AZN.
Oh, this is a classic. You've got show them there the head and shoulder top textbook, boom, 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 right shoulder. You wanted to get out of it well before it blew up. Look at how it looked great in August, and then let's follow it because this is the field you want to develop. In this market, you can't just look at your stocks once a week, so on weekends. So you take a look, it was good, and suddenly got a downside gap. That was like somebody tapping on the shoulder and say, hey, I'm a little concerned. Let's do some trimming. Then a few days later, boom, look, it broke the 50-day MA. I'm out of here. This isn't like the old days, gone. Then look, if you didn't get out, how the failing rally, next rally, didn't even get close to the 50-day MA. And then boom, look what happened thereafter when it really hit the fan.
Yep, you've got a bunch of downside gaps right there. Perfect.
And these moves are unbelievable in the middle of this bull market. Now, what's the next one, Rich?
Biogen, BIIB.
An institutional favorite. In fact, I got some blowback from some people. I recommended it as a sale, but you take a look. Could we go back a little more to the left?
Yep,
Yeah, yeah. Okay, good, good, good. Look how, again, it's textbooky and it's repetitive time after time. It was good. You had the double top there back in May, June. Yep, that's it. You broke the 50-day MA. You should have gotten out. It broke the 200. You're gone. And since then, forget for 1 or 2 days that, in July, you might have gotten a tad above it. It was a declining moving average anyway. It's been a disaster. And again, each of these things was predictable and it followed a good probability game. Let's go to the next one.
yeah, I just want to point out reject at the 200-day here, 200-day here a bunch
Right.
of times, and then you got the gaps down. So it's the same template over and over.
Over and look at how after that last gap in August, as oversold as it got, it never even, forget about getting above, it never even got back to the 50-day MA. That's a horror show.
All right, next up we've got Crocs.
Ah, this I'm very proud of because there's another institutional favorite. First, let's go there. And you see, like in July, or it's a new high. It's still, go back to last July. It's still at the top there. No, no,
Oh, sorry,
go. I'm sorry, it's my bad. Yeah, you're right in the area. It's a head and shoulder. So that go to the head right there.
right
You
here.
got it.
Yep,
Look at how you had the left shoulder, the head. You twice broke the 50-day moving average. This is a classic stage 3 top. And boom, look what happened recently thereafter.
perfect. All right, next up we've got LPG here.
This, as long as you're not long this, and if you're out of the way, and if you're short, it was a thing of beauty, a joy to behold. Again, show them back when it makes its the next high. Where at that point, you're still feeling good about it. Then this is why gaps are so important. Look at how suddenly, boom, you got the gap. Look at the volume. That's like somebody hitting you on the side of the head and saying, hey, something is wrong here. And you should have gotten, for sure, you should have first reduced on the gap. And then when it broke the 50-day MA, you should have gotten out and take a look. Since then, it's never even given you a chance to get back above the 50-day MA. The rest has been history. It's amazing. And I'm very proud of that call.
All right, next up we've got EVH here.
All right, here we go. Same thing. Look at how once it broke down the 50-day, boom, and look what happened thereafter. Volume came in, just terrible, one after the other.
ICLR.
Again, same thing. And now this is important. Look at how this broadening top played out. You went so long going sideways, it never completed a new breakout. And it went back and forth through the 50-day MA, tells you're in stage three. And then once it broke the 200, the rest is history and it's gotten destroyed.
MRK, another pharma.
Exactly. Now, this is a perfect example of weak stock within weak group. First, show them how even before it broke the 200-day MA, you broke down from, got it, you broke down from that area. You had that downside gap a little, you got it. You had the downside gap. You had the volume come in. It's repetitive. And this is why I'm taking all the time with this teaching right now. It just is so obvious. And again, so many market players, even a lot of professionals, make the game, and I do think it's a game, harder than it has to be.
All right, next up we've got QRVO.
Okay, I'll let you take over here. Show them, boom, how first it made that top. It broke the 50. The rally failed next at the 50.
Hmm.
It broke the 200. It's gone to hell ever since. The volume came in. There are so many, and I could have shown you another 50 charts like this that we have recommended as sales. And this is why when you ask me about a prior market, yeah, it's a little bit like 72, 73 in terms of narrowing down, but I've never gone through something like this where there have been so many accidents and so many good for true hedge funds, who in most cases are not doing a good job, so many downside plays in the middle of this bull market that they could hedge with versus their good longs. This market is made for a hedge fund that knows how to play the game.
Perfect. All right, next up we've got RGN. You've got the breakout
Same,
50 right here. Yep.
you got the same thing. Look at how you got the failing rally. You broke the 50-day, you were gone. You broke the 200, you better have been gone, and they killed it.
Perfect. All right, next up we've got your positive recommendations.
Yeah,
By the
now
way,
let's
yeah,
good. Now let's go to, it's one thing to look at history. Now let's go to what I think are things that we should put on our buy list. Now, just call them off for me so I know which ones we're talking about.
yep, this is DCGO. And by the way, I have your note down here that you sent over so people can reference that as well.
Oh, that's great. Okay. Oh, you do a great job. So anyway, it's extended coming back in. I'd rather buy it coming in, which I show that area. And if it broke out tomorrow above the 445 close, I wouldn't want to do more. But if you buy some coming in, and then let's say over the next 2 weeks or so, it does work under that level, and then it breaks out, I would then double up on a breakout. Again, use common sense.
Perfect. We've got DRVN.
Okay, here we go. Extended. You want to buy the pullback. Watch how it acts near the gap.
Perfect. ET.
Now, this is for conservative players. This is not a rock and roller, but for people that want to get into something that's a nice, easy, slow mover, this is one of the few oil-related stocks that I do like. And by the way, talking about oil, let me just free associate for a minute. The XOP is the ETF for the oil. Oh, you're great. Put it up. Now, don't do anything yet. I'm just giving you a head start that I always go by feel, that it feels like you may be starting to shape up. Now, even if it breaks out, it's going to be a B plus, not an A plus. But if it breaks out and closes above the Tuesday high of 43.50, yeah. But closing above that, I think you're going to start to see some oils come to the fore as they take profits in other things that are extended. So that's, if it never breaks out, don't buy any. But I'm just trying to give you all the thoughts in my head. I think that could be coming. So anyway, but this is a fine stage two stock, conservative buy and a pullback.
Yep. Next up, we've got GME.
Oh, I like this a lot. Now, obviously, GameWorks is not for widows and orphans, but if you want to play the speculative game, I think it's going to come back once more. But if it's really good, I don't think it comes in much more, about 24. Coming in, I'm going to have clients buy some more. And then again, if it does work under today's high, and maybe a week or two from now, it closes above that, as long as you know you're dealing with a speculative stock, can we show a weekly chart of this? And
Yep.
I'll show you why it kind of interests me. And I want to go back longer. Yeah, okay,
Here's the
fine.
power move. Yep.
Yeah, good. If you take a look, this, if it breaks out cleanly above there, it's down from big high there. I'm not talking about going to a new high, but this could very easily go back into the mid 30s, but I think risk of about 22, 23. I think
Perfect.
that's an interesting speculative play.
And that area that you highlighted here, it lines up with these highs, it lines up
Right,
with this prior high. So that's why you picked that. Yep.
right, exactly. And again, if it comes into like 21, don't buy it. But if it holds obediently, yes, I think it's a good one.
Perfect. We've got Penn, PENN.
Oh, I like this. This is showing good relative strength, and it's been a dog for quite a while, but it's interesting because a lot of my casino recommendations in the last week or two have rocketed ahead. I don't know why, but I don't care why. So this is in the right group, and I think you could buy a little bit coming into a 20 plus, and then if it does a little bit of more work and closes above today's high of 21.75, I think it's an interesting play.
Perfect. Next up, we've got SYK here. A little
Yeah,
bit
now
extended.
this is more of an institutional kind of favorite, but I like it on a pullback. It's extended near term. Don't buy it up here. But I think that this on a pullback, I think we've got the wrong levels in there
Yeah, I
here.
think I've got the wrong.
Yeah, it doesn't matter. I
Yeah.
remember this. Coming back in like 375, 380, boom. If it holds in there, I think it's a good quality stock, which is the antithesis of the games works.
Yep. Perfect. Here we've got Disney, DIS.
Oh, now this is interesting. Thank God we covered the short, and this teaches us so much. It was a great short, and it's just people don't understand it. You know, they make the game harder. Shorting is just a reverse game of buying. So look how terrible it was. Then when you came down there in September, it was a warning that you didn't come as low as you did in August. Then
Hmm.
when you made that little gap above the 50-day MA, short covered. You see it? Yep, you're right on.
Yep.
Then look how when you then had the next pullback, look how it respected the 50-day MA. Great. Now look how you got that upside gap. And look how now, even today in the messy market, look at volume coming in and it closed above our level there. I think that's an interesting conservative play.
And was this broken down enough to count as a 4B minus? Because this is a pop above
Yeah,
the 50 day.
I didn't honestly play it, and it didn't make a big enough base for me, but I
Yep.
did cover the short, you know, and sometimes you can be try to be too perfect. You know, that's my neurotic Jewish nature. I always try to be perfect, but for sure, if you were short, you had to cover. Again, the rules, and this is why I enjoy working with you and teaching everybody here. If you follow the rules, of course, once in a while we'll get whipsawed. Nobody's always 100% right, but we have such an outstanding track record because, you know, people say nice things about, oh, you're a genius. I'm not a genius, but you know what? I know my stuff. I'm the most disciplined player that you'll find. And if you're just disciplined and you have the good rules, it works.
Perfect. Next up, we've got WBD, Warner Brothers.
Right. Again, a little gap there, recent gap as it comes in and tries to fill a gap. It's not a quick trade. I think it's another investment. And again, it may even be working with Disney. Who knows? Because it's a similar group.
Right.
So the market is very, and that's another thing I didn't think of. I love as we talk, it kind of expands out in my head. This is another thing that's different than the old days where I went through the 70s and 80s. Then, although group action was always important, you'd have much more diverse good and bad within the group. Now, while of course there are exceptions, you have much more cohesive group action. And I notice when a lot of my stocks turn out to be, sells in a group, they almost all screw up. Conversely, if they're buys in a group, they almost all work. And there's a reason for that. I think the ETFs do that for us.
Hmm. Perfect. Next up, we've got the crypto-related stocks, which have the big reversals today, but I mean, this moved up 80% in just 5, 6 days here.
Exactly. And as these come, stocks like these come back in, which one of my cryptos was this?
This is Coinbase,
Oh,
Coin.
okay.
Yep,
Oh, Coinbase. Okay. This is a wild trader. Right. Oh, so we have it. It's extended coming into my 275, 280, 285 zone. I think it will be a buy again, but short term, it's topped and it should be bought on a pullback. Don't buy it tomorrow morning.
next up, we have CORZ, Core Scientific.
Okay, let's take a look. I like this a lot and pulling back in toward, I'd say 14, 15. I'm going to be a buyer again.
Perfect. We got Mara as well.
Yeah, this is great. Look at how this morning you could have sold it over 26. That's why I talk about this market. I don't care if you're an investor, you have to, when you extend it, the stock had gone from 15 to 26 in a matter of days. It's common sense, you trimmed. And now I'm looking to buy it again. I'm guessing it's plus or minus 20, 20 and a half, holding above the gap. I'm going to be a buyer again.
Perfect. So those are the positive names and charts, and we've got the negative ones here, and I can let you know. Here we've got AOS here.
Here we go. AOS, look at it. It did its thing. You had the downside gap, yada, 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 the same thing. It broke below the 200, then the 50. And look what's happening in the middle of the bull market. Terrible. Don't go bargain hunting there.
Yeah, so this would be on a failed rally up near 74, 76 is what we've got marked
Right,
down here. Yep,
exactly right.
yep. All right, next up, we've got American Eagle on rallies toward the 19.5 to 20 zone here.
Right. It's oversold. It's going to rally. I'll be surprised if it gets much above 20. So I think something like 19 and a half, 20 coming up. It's a sale. You shouldn't be in it anyway, but if you are, sell the rally.
All right, Stan, next up, we've got AVY. So breaking 202 and more aggressively closing below 201 here.
Right. And on a rally, you're spot on. And on a rally, probably up, I'm guessing about 208, 209 up there. It's also a sale. But look again, this is so important. How many inferior charts there are. And this is why I have no patience where a lot of people and even some of my institutional clients will be buying stocks like this, which I find ridiculous. I think, again, I always talk in analogous form. That to me, this is like getting hit in 20 in blackjack. You may pull an ace, but it's a lousy bet.
And look at this gap that gets sold, breaks the 50-day. This is a warning sign even before all of this happens to me.
Right,
Yep,
exactly.
yep.
Exactly. And that's another thing. The market really so often foreshadows what's coming if you just, it whispers in your ear if you're just willing to listen.
Perfect. All right, next up we've got CRUS.
Okay, take a look. First, we had broke the 50-day MA, you should be out. You had the downside gap. You had the failing rally that couldn't even get back to the 50. And this
Baby
is
gap
why
here.
in
Yep,
these days, I don't want to wait for the 200, but look, then you broke the 200. I think this is going even lower if it closes below that prior low.
perfect. Next up we've got CL here. Similar story here. Break of the 50, failed rally, gap downs. We're throwing a lot of this similar tennis balls, but they're important tennis balls
Exactly.
for
And this
everybody.
is what over and over again, if you get it, again, it's just following the rules of the game. These are not accidents that just come along. These are accidents that could be avoided.
Perfect. All right, we got COLL.
Okay, this is oversold. So it's a rally up. Sell it on a rally up, maybe 32, 33. But this is another loser. And look, you made that head and shoulder top. Look how you broke down below the 200-day MA. First the 50 as it weaved on the right shoulder, and then it broke the 200-day MA. Another loser. And this is why it's such a mistake when people think like, hey, look how far it's already come down. I'm going to get a bargain. I don't want bargains, okay? I want to have things that have good probabilities.
Perfect. All right, we've got DHR here.
Okay, again, look at how first you had a triple top, never got above that high from last July, August back there. Then you broke the 50-day MA, which you should as a warning. There was one more rally, there was a gap down on increase in volume. Boom. Again, it followed the textbook perfectly, and it's another loser if you're long.
Yep, perfect. DKS.
Oh, this is still early in its development, but let's follow it because I think we can teach them a lot with this. First, look on the left side. If you look like June, July, August, you have first it was right that upside gap,
Mm-hmm.
but look at how it then broke down below the 50-day MA. Now it went up again. Then look how it broke the 50 days. Something erratic like this, you don't want to be in. Okay. It can't make up its mind, but it finally did make up its mind. Look at the high, go up to the high there. And once you got that key reversal day, you had the downside gap and the volume came in, the rest is history. Then below the 50 and boom, the 200. And I think this still has a ways to go.
And is this a sign of a classic stage three top where you've got all these gaps up and down?
Absolutely. Yes, yes, yes. And you know what? And I used to say that also when I was on the seminar circuit. The bigger the top, the bigger the drop. This is a perfect distributional top.
Yep, perfect. Yeah, print this out, guys. This is one to be studied. All right, we've got DBD here.
Now, here's a case of going from the penthouse to the outhouse in a hurry, and it's not even done yet. Take a look. It was looking okay. Boom, you had that, what I call an island reversal. It made that new high, but show them the island reversal. They're pretty rare and they're wicked. First, it gapped on the upside. Then it gapped on the downside, leaving that peak day as an island. And if you go back, islands like that usually lead to very, very bad things. I remember an oh God, I think it was 1962 when I was first learning to chart. Avnet, which has been a good stock now, but Avnet in those days had been had been a big run on the upside, and then it had an island up on top. And I'm telling you, it didn't get above that for decades. And I'm telling you, so here we go. You've got, this is still not even in stage 4. It's stage 3 because it probably needs a little more distribution, but you don't want to be in this. And it'll probably rally back up once or twice to the 50-day MA. And then once it closes cleanly below the recent low, just from a few days ago, it's going to go into stage 4, and a problem stock's going to become even more of a problem.
Perfect. We've got IFF.
Another quality stock. By now, everybody should know, look, first it made that highest high. So go there. Then you broke for a second time the 50-day MA. The first time it broke, the 50-day was still going up. So you maybe reduce it. Then it broke the second time, it's flattening out. And then boom, if you're still in it and you got the downside gap and you got the volume, and now you had a break of the 200-day, then look, you had the failing rally where? Right to the 200-day. And after all these years, it still amazes me how often it follows the textbook perfectly. It failed right to the silly millimeter, right at the 200-day MA.
Perfect. We got LLY, another pharma company.
I'm early here, but anybody who's listened to me, I've gotten them out of LLY. Again, you can see why. You've got the series of tops in stage 3. Then you broke the 50-day MA, you moved back above it. Once you broke it a second time, you're out of there. Then, you got the downside gap on volume. You got the phony rally up. This is still like a stage 3B. You sure shouldn't be in it. And if it breaks below that 769, I still know some institutions that are going to get hurt.
And up here, I want to highlight these closes here. What does that tell to you where it tries to push higher and then closes low in the range? Is that a subtle sign of distribution that you like to pick up on for more traders than investors, of course?
You just beat me to it. I was going to say you're so sharp, but that's for traders. Yes, as a trader, that was again foreshadowing. Look at 3 times it tried to go to new highs, and each time it had a lousy close. That's another hint. But then if you're a trader, look after it broke below that little low. Just go a little to your left. Yeah, after those 3 failures, and then it broke below there. If you're a trader, you got to be gone. And then when it starts breaking the 50-day, this is a big top, and I think it's going to hurt a lot of people. And of course, it also makes sense because they've got the good drug and whatever, and everybody loves it. And I think that it's going to be a big problem.
So the news is good, but the technicals are saying a different story, and we got to listen
Exactly.
to the price
And that's
action. Yep.
another thing. You know what? Nobody wanted it. Let's put up a weekly chart. Let's go way back, Yeah, look at it. This is a beautiful thing. Look at how way back then in 2017, it was coming out of that base and nobody cared about it. And look at how the whole time up, look at how the whole time it's respected there, the long-term moving average. So even though it's still above the long-term MA, it's topping out. And I think that this has a lot of potential on the downside.
Perfect. All right, we've got SRPT here.
Same story. First, you see it broke the 50 on a gap. The next rally failed right at the 50, and you should be out of it. And then it's had a couple of failing rallies since then, and now it's making a new reaction low. If you're in this, I would say, thank you, Lord. Sell it on the next rally.
All right, TMO, Thermo Fisher Scientific.
Same thing. Look at the distributional top. Look at the downside gap. Volume came in. I think it's another big problem. These didn't happen. It didn't come from nowhere.
Uber.
Oh, this is good because this is a stage 3B that hasn't happened yet. I haven't really shorted it yet, but I've got anybody who's listened to me on the long side is out of it. And let's show them. Again, this is great teaching aid. Just like we did that good teaching course, last year.
Mm-hmm.
Take a look and see back in October when it had an upside gap, it still looked terrific. Now watch how it slowly starts to deteriorate. First, it comes in and you think it's still okay. And I was actually wrong because I thought it was going to hold the 77, 78 area. But after it tried to do the textbook thing, then show them how it had that big downside gap, boom, on big volume. Look how the next rally failed right by the 50-day MA, closing below 69.5. Well, you can't be in it. It's a 3B, but I think it becomes a short. So never a guarantee, but again, I know good probabilities. And it's interesting because this shows how tricky and trying this market is. Below 6.5 at stage 4A, I think it's a short. Let's put up and show them lift, which usually you'd expect these two stocks to move in synchronized fashion. But look at lift.
Yep.
Isn't that interesting? Lift is the exact opposite. It's extended, I think, coming back in toward 15. 14 at 15, I think lift is a buy. Well, I think that Uber is a sale. So again, if you're just a strict fundamentalist, they don't stand a chance in this market. But if you know your stuff, again, not going to always be right, but I think you're going to be right a whole lot more than most people on the street.
All right, we've got the last tennis ball here, so let's make it count here. WSM.
Okay, here we go. Another look at how it's made this big. Let's see a little more. Yeah, you got it. Big distributional top, big stage 3 top. This is going to be a problem. Again, the bigger the top, the bigger the drop. So you can't be in this stock. If you are, sell it either on a failing rally up to 200-day or closing below that recent low right there from the other day. Yeah, up and down, it's a sale. And again, The odds are so clear. And meanwhile, so many people today, look at the volume, they're buying the stock. I just find it amazing.
And look at this bar right here. I mean, that's the warning
Yep.
sign right there.
Just like that other one you pointed out, that is a telltale. When you get that kind of a tail, that's a telltale warning.
Perfect. All right. So we've just got some closing questions here. This has been great. I hope you guys really enjoyed the chart session. It's something that you can go back and watch many, many times. Uh, but Stan, is there anything from your book, which I know was written over 35 years ago, that you feel is no longer applicable or has significantly changed as the markets have adapted and changed as well?
Yeah, I think really we covered that to a degree, Rich. You got to be faster, even if you're an investor. You can't wait to break the 200-day MA. You got to first take some incremental off, like we did in the crypto stocks. Then you have to below 50. If you listen to me, you got to be gone and find something else that doesn't have any, black cloud. And in addition to that, like I said, back in the 80s, we didn't have the stochastic and MACDs, whatever. So traders have that, but you have to know, put that in as part of the package. I've seen some people hurt themselves because I'll always think that the good old fashioned chart is numero uno. That's where it all starts. And then you play around and fine tune it. But I've watched some people that strictly do just stochastic and they become old before their time.
Yeah, I think a common thing with new traders nowadays is they learn the MACD, they learn the RSI, they memorize that instead of looking at price action, which actually is the truth. That just is an
I
additive
agree.
tool. Yeah.
You're so right. The price action, that's a lot of times people are saying to me, Stan, do you think that all the things that you wrote about in the book are still valid? And absolutely, because to me, supply and demand is always going to be supply and demand, and emotions, fear and greed is going to always be there. So it's still the same game, but it's a hell of a lot faster.
Yeah, and you've seen so many bull and bear market cycles, stage one through stage four over and over again. Is this bull market typical, or in some ways is it different? What are your thoughts on that?
Like I said, the way it's different is that you have a diversity of good and bad stocks that I've never seen in the middle of a bull market like that. So I think that's different. And that is why I write repeatedly, be in gear with us.
Perfect. And this year has been exceptionally strong. There's been so many opportunities as we've highlighted. Are there any stocks or names or even just kind of themes that come to mind that traders should go back and study, look at the charts, look at the price action, to really just sharpen their edges and be ready for the next year and the next bull market?
I think, Rich, that's real. I mean, we've done this tonight even longer than I planned on. I think that we did a junior teaching course tonight. And if somebody really does their homework and they don't try to overthink things, but they look at the good versus the bad, I think, it's kind of obvious.
Yep. And if somebody wants any even more stocks that Stan's analyzed and gone through, as part of your masterclass, we went through and made model books of stage one, stage two, stage three, stage four, breakouts, broke it all down really simply and giving you so many examples that you can go back and study. So the link to the masterclass, which is excellent, we've had hundreds and hundreds of traders go through that, is down below in the
Yeah,
description.
I
If you'd
was
like to check it
really
out.
proud of that trader course. I think it's great. And it's kind of like an encyclopedia. You can go back and you can look at it. And anybody who now is interested, you'll tell them how they can come in through you and sign up and let's win together.
Yep. One last question before I mention GTA Global Trend Alert. Do you have any advice for traders who want to finish off 2024 really strong and, kick ass in 2025 as well? Any kind of words of wisdom from yourself?
I would say, because I see people already starting to predict what 2025 is going to be, and I don't have a damn clue. I would say just don't look around too many corners. The way it looks now, I think we're good unless we start to suddenly get downside gaps and things we don't expect. We're good through the end of the year, probably into January, but don't look beyond that. And the other thing I would say, if you look, the market's always giving hints, even though today, short term, the Russell was very weak. It was actually the weakest of the indexes. But overall, when I go through the charts, I think from now toward the end of the year, you're going to see a lot of secondary stocks that we're recommending, a lot of smaller stuff come to the fore. And even though there's a couple of, you know, of the Magnificent Seven that we still like Netflix, there are so many others. Like I think Apple is making a stage 3 top. So I think you're going to see a lot of money start to flow out of big winners of 2024. And I think it's going to find, it's already starting, I think, going to find its way into a lot of stocks that you may never have heard of.
Perfect. Well, we'll see if this bull market goes to extra innings, or maybe there's a rain delay or something. We'll have to see what
Right. We'll
happens.
see if right. We'll see if there's extra innings, but don't try to think about that.
Yep.
Just deal with what has to be done here and now. Because if you think too far down the road, I think that you're going to foul yourself up.
Yeah, deal with the pitches that are coming to you at the plate right now. We can talk baseball analogies all day long.
Right, for sure. Even the baseball, I love football even more. So, just try to make first downs as you go down the field.
There you go. Well, Stan, it's always a real pleasure talking with you. It helps sharpen my edge. I'm going to rewatch this many times, take notes. So thank you so much for your time. Thank you to all who are listening. I hope you guys enjoyed it as well. Again, go back and rewatch the charting section. I think is extremely valuable. And definitely, if you're interested in getting a more in-depth analysis, recommendations, learning directly from Stan, you can check out both the masterclass as well as, of course, Global Trend Alert, which you can access. This is an exclusive offer. He's never before done this, which is awesome, through TraderLion.com, and the link to that is down below in the description. So thanks to all. Stan, any last words for everybody?
Yeah, the tape tells all.
There you go. That sums up the entire video. So thank you guys all. Leave a like down below if you enjoyed. Subscribe if you're new to the channel, and we'll see you guys in future videos. Take care.